Welcome to the Go-to-Market Navigator by Fin Capital, our ongoing series where we break down the essential components of nailing the right go-to-market strategy. I'm Allison Williams, an associate on our platform team, focused on business and corporate development support for our portfolio companies. Today, I'm joined by Javier Ramirez, founder of Cuota, a go-to-market advisory firm focused on B2B SaaS, enterprise software, and fintech companies across the US, UK, and Latin America. We hope you enjoy the conversation as much as we did. Javier, thank you so much for taking the time to speak with us today. We're excited to have you on to discuss all things outbound sales. As a firm, we work with companies across the venture life cycle, so everything from pre-seed to pre-IPO. And as you can imagine, and as you've seen, the go-to-market motion can really change over the course of a company's life cycle. So we thought it'd be great to have you on, as your experience is very relevant to this. So with that, would you mind sharing a bit more about your background, what led you to start Cuota, and what Cuota can help companies with?
Awesome. First of all, thank you for having me, Allison. I'm stoked to share about this topic, which I'm super passionate about. I'll give you guys some high-level background. My career actually started in finance. I started as an analyst at Goldman Sachs and then moved to a sales and trading organization. But I had a big hunch to be part of something where I could build but also perform. That actually asked me to move to Silicon Valley in 2013, where I picked a couple of winners that helped me build a very successful career in B2B sales. It was early on at Zenefits, ended up running one of their enterprise sales teams, which was a team that relied heavily on outbound. From there, I went to be the first sales hire at Rippling, build the go-to-markets from scratch, from Parker Conrad's basement, which was an incredible experience. I had a short stint at a HR tech startup as a VP of sales that didn't really work out. And then I led enterprise sales for WeWork in the Southeast United States. That actually brought me to Miami, which is where I still live. And so in 2020, I took a step back and sort of realized my exposure to 3 unicorns and to knowing and understanding successful, repeatable sales playbooks. And I, started to ideate with, the investment community on what could productize this or how could other companies benefit. At the same time as I talked to companies, I saw a natural opportunity for people to want to get exposure to my background, my experience, and to sort of implement that into certain companies. So naturally, Cuota was born there to really help Series A, Series B, fintech, enterprise software, and B2B SaaS companies across the US and Latin America. To really find their footing and find that, escape velocity from sales, whether that's from, kind of building more effective sales teams, restructuring, sales organizations, but also, engaging into how does an outbound sales team should, kind of perform. So I've been doing that for 4 years now. We've worked with over 55 venture-backed companies, have a lot to share. So fire away if you're curious about anything in particular.
Oh, that's great. That's fantastic background. And I'm sure you have great experiences to share across the different firms that you've worked at. And now, seeing 55 companies in 4 years, that's exciting. And we're excited to learn more. So just starting with the basics, I think most of our audience will know this, but just to kind of get a lay of the land, what is outbound sales and kind of how do you differentiate that from other types of sales, if you will?
Yeah. I think outbound is the proactive nature to reach out to companies, to promise that your solution can solve any kind of business problem. Within outbound, there are many, let's call them motions where you can cold call, you can send cold emails. Nowadays, there's a lot of social selling. Networking is part of, what could be considered outbound as well. And even direct mail, snail mail in the most basic form. So I think that where it differentiates from maybe marketing, generating ads, or doing other types of, kind of pull motions to bring clients to you, you're actually doing the push motion where you're the one going to the client in a reactive form, where someone may not have a need for your product, but you have to build that.
Right, definitely. So it's the targeted nature of it.
100%.
So when should a company start doing outbound sales? Is it, a few months into forming, or once they kind of have an idea of the product, and who should be responsible for those outbound sales? And kind of part 2 of that question is who should be responsible change over the course of a company's life cycle. So just thinking about, founder-led sales versus when to
Mhm.
start building up the team and
Right, right. I think it's a phenomenal question. What I always tell people is that there's no right or wrong time to start outbound. As soon as possible is usually the best answer. And the reason I can back that, Allison, is because outbound actually takes time to generate good results. It takes a handful of, very specific iteration. But I think that also when you talk about founder-led sales, it's a very high yield, low investment type of behavior or practice that you can execute on to start getting, kind of real market feedback. The good thing about that compared to, maybe marketing where you have to put in some marketing dollars into ads or you have to, build some content, your, feedback loop comes later on, where with outbound it's pretty easy for you to start seeing what's working, what's not working. And I think that it starts with the founder, kind of going out through their network. Most companies that, for example, go to YC will reach out to YC companies first, and then they'll start, going to former colleagues, and you start getting wins, and those wins hopefully help you, kind of reiterate what you're solving for, but also improve the messaging. So then you can go to non-friendlies. What happens when there's that transition from, let's call it founder-led sales to sales-led growth? There's a point in time where the founder can't continue to be the salesperson or the one that's playing, kind of the de facto SDR. So you end up doing an SDR hire pretty early on, which actually was the hire that Rippling did as its really, really, really first go-to-market hire, to start, kind of generating that demand. And so you can start having, the founder more focused on, kind of the sales part of the business, which is giving the demo, trying to close account, doing trials if needed, et cetera, et cetera. So I think that, the more you go into later stages, obviously that reporting structure starts to change, because eventually you'll, kind of think about hiring a sales leader that will take care of managing that SDR that potentially is doing outbound, or you may have an account executive that's doing outbound himself or herself, and that usually rolls up to kind of the sales leader and is passed off from the founder, of course.
great, super helpful. And how do you think about the differences between, outbound sales for B2B enterprise motions versus B2C or B2B SMB? I know you've had a lot of experience in B2B enterprise, but they're obviously very different motions. So I'd be curious to hear your perspective.
This is a really good question, Allison. I think that the way I first, kind of think about this question is that they are three completely separate go-to-market strategies, right? And I'll start with B2B enterprises. Obviously, as you mentioned, it's the one where I spend a lot of my time in. The first thing is that the stakes are high. You're, kind of going after big companies with big contract value potential. And what it tends to happen is that you go for what's called an account-based selling approach. And so you have usually an SDR that might take a look at 10, 20 companies that they really want to get into. And they get very tactical, but very strategic about what their approach might be. In this situation, you might also have a pod. And what a pod is built around is you have an SDR that's pegged to an account executive, an enterprise account executive, and those two work as a couple. And I'll explain a couple of strategies. The most common one that comes to mind is the go low, go high. So you send the SDR to go to a person that maybe is not the VP, maybe it's not the decision maker, and he can gather as much information as possible. Let's say, if you're selling into finance, you might go to the analyst. The analyst is friendly enough, is willing to give up information, has more time on his or her hands. So the SDR then gets as much information as possible, comes back to the enterprise account executive. Now the enterprise account executive has a lot of feedback on, kind of what pains, priorities, needs are for that specific company. Now that enterprise account executive can maybe go to the VP with a more specific approach of saying like, hey, we spoke with your team, and this is what we heard. I think I can help you. And it becomes the most tailored, most successful, or highest converting way to get in front of those companies. Let's call it go-to-market motion on the enterprise side is not about volume. It's about, conversion. And it's, of course, because of the high ACV nature of these deals, if you close one of them, that could be game changing for the company. In terms of B2C, this is not my strongest expertise, but I know that for a fact you leverage a lot of marketing to drive, traffic to a particular website, which may convert into, traffic that fills up a landing page, et cetera, et cetera. And that sort of drives in, kind of some traffic, which again is a completely different strategy because it's more
Right.
about, pulling people into a place, assuming they have a problem. And then in terms of B2B on the SMB side, it's more of a volume-based approach. So the difference here between that and enterprise, SMB, because you have less decision makers, usually a low ACV type of environment, most SDRs or teams that are doing outbound sales will look to use tools like Ample Market, tools like Apollo to build email sequences, but that are spread across different channels. Channels meaning email, LinkedIn, phone. And so you're just trying to solve for where can I get in front of this person with the most success because I don't know that, or I have an assumption. I'm going to try to, kind of spread my efforts to get the highest conversion through one of those channels. But
Right.
then that becomes a very numbers driven approach. And of course, the construction of the messaging and the strategy, I think, are extremely important. But very different than, kind of what I described for B2B enterprise, as you mentioned.
Right. That's very helpful and kind of leads nicely into our next question, where I'm curious how you think about on outbound balancing personalization with efficiency, while still, differentiating yourself for others. I know, if you're targeting only a few large enterprise customers,
Mhm.
you can be a bit more hands-on, but,
Mhm.
maybe you're targeting enterprise customers and smaller businesses. How do you kind of balance it?
Yeah, that's a phenomenal question. And I'll go back to what I said a couple of minutes ago. I think there are two things that are best practices and that also people miss on. One is strategy. The second one is messaging. So from a strategy standpoint, even if you think that it's like low risk, where a lot of people are just sending out messages for the sake of it, you got to understand what's going on in the market. It's noisy out there. There are a lot of people that are using the same tools. Obviously, there's AI copywriting tools now that build the messages on your behalf. So I think it's good for you to know, where your competitive, approach is and how can you differentiate from that. Where do my buyers spend the most time? I think is a question that a lot of people don't spend enough time to think about. So, and I'll
Right.
give you a very persona specific example. Um, Engineers don't like to be on the phone. You usually don't call an engineer, right? So I look at some companies that are, kind of developing their outbound strategies, and they're like, "Oh, we sell this product for engineers, and we're doing 100 calls a day." That's not going to work, right? And
Right.
so when I think about where they spend their time, I'm thinking like, well, if they're not, picking up the phone, like then you have to go, do a email first type of approach to make sure that you're getting as close as possible to them and they pay attention to hopefully have that first conversation with you guys, right?
Right.
And then of course, what do they care about sort of leads me to the next point, which is the messaging. There's a very simple messaging framework that I've seen a lot of companies very successfully, kind of operate around, and it's called AIDA: attention, interest, desire, action. The way you craft the message and thinking about like, okay, the attention grabber is the subject line. A lot of people are on the
Right.
phone nowadays, but they're also like looking at organizing their inbox based off what they see as a subject line. And that's the deciding factor for them to decide, am I going to open this email or not? Right.
Right.
And so really spend time on that hook, on that, kind of initial attention grabber, because that leads you kind of in a waterfall format into like, okay, what's the opening sentence that I can tell them? And I'll tell you a couple of things that people will do that is wasted real estate. Things like, hope you're well, how are you doing? If I don't know you, Allison, and I'm like trying to get a meeting with you and I'm telling you hope you're well, I know you're coming to sell me. So I'm going to
Right.
delete your email pretty quickly. And so, that opening line then driving you to, kind of the second sentence, and then of course the call to action, I think are part of things where people don't spend enough time constructing a message that's worthwhile for people to open it or to talk to you more.
Yeah, those are all very helpful points. Curious on the opener and kind of closer, are there ones that you've seen kind of work well across a lot of organizations? So you don't have to necessarily personalize them to the person, or are some of the tools that are out there now able to help you personalize them even further?
That's a good question. I've seen many things work. Again, it depends really on the buyer persona, industry, and also geography. What
Right.
works in London and US versus Mexico might be really different. But across the board, I think that the more personal and less salesy they sound, the better.
Yeah.
So it might be Fin Capital, quota, right? It might be meeting request. It might be sync. Historically, there was an email subject that was very successful in the Zenefits days. That was, "Hey." It seemed to come from
Mhm.
someone that you knew, so you were
That's
more,
funny.
kind of prone to open it. But the ones I would definitely avoid would be the ones like, um, "Quota, let me help you increase your sales," or like, "The
Okay.
most effective AI tool in the market," or
Right.
like, Are you not converting outbound emails?" Those
Right.
types of ones that sort of tell you that somebody's coming to sell you, don't tend to convert pretty well because people don't like to be sold to at the end of the day.
Yeah. That's very helpful. Um, are there any other kind of key mistakes? You've mentioned some, but are there any kind of other key mistakes in general that you would look to avoid on outbound sales?
Um, I think that if you're thinking about enterprise, if you're thinking about who is on the receiving end of it, you have to think about their level of sophistication, or kind of mirror what they are, or who they are. So I'll give you a specific example on fintech because I'm currently working as a fractional CRO for a handful of fintech companies, and we're talking about building trust. And when we talk about financial movement of money, it requires a lot of trust, and the startups, or even the growth stage companies, need to earn that trust from the minute that they send the message,
Right.
right? And so, especially if you're kind of a payments orchestrator, if you're a credit card provider, if you're a new bank, you're being compared to the traditional way of selling, where someone shows up in a suit to your office and it's like a very sophisticated, kind of approach. But then you have, if I were to wear a t-shirt to that meeting, or if I were to, kind of behave myself through my initial communications, I'm sort of like starting that initial interaction or experience with the customer, on the wrong foot, I would say. So I
Right.
think that a lot of people don't think about that, but it's like, think about the amount of on the enterprise side, they're used to being sold to. So you have to meet or match or exceed that level of sophistication when you show up to talk to someone. That would be one of the
That's
bigger ones that a lot of people don't talk about, I would say.
that's very helpful. And a lot of the companies we talk to are selling into banks or other large financial
Mhm.
institutions where maybe the culture of, a startup versus a bank is of course very different, and important to understand those nuances.
Right.
Um, just two more quick questions, I think. One is just what do you view as some of the most important metrics to monitor? And can you share any realistic targets to hit for these? I know it'll change, of course, across companies and across life cycles, but I'd be curious what you focus on the most.
Yeah, that's a really good question because I think this is one where people sort of iterate on the wrong focus of metrics. At the end of the day, North Star for an outbound sales team is qualified meetings booked, right? Any SDR that's fully ramped
Mm.
should look to be booking anywhere between 10 to 15 net new qualified meetings booked on a monthly basis. Right, that's fully ramped. That's obviously like you figured it out. You've done a couple of iterations of your messages and whatnot. And what happens, Allison, is that a lot of people will look at open rates. Open rates really don't tell you that much because it's you send a bunch of emails. 60% open rate doesn't really tell me a story. I'm really looking at my reply rate, or kind of what did I do with those metrics. I think
Right.
from a sales management standpoint, that's where you sort of have to shine a light for the SDRs to correct those behaviors, to say like, listen, there are so many tools nowadays that help you understand open rates, that if you look at someone that's, opened your email 3 times, give them a call. Like they've shared this, or they've thought about this enough, but they haven't responded. And so, kind of your proactive behavior on top of the proactive behavior of already having reached out is, let me give them a call, let me send them a message, let me, get out of the sequence and say like, hey, listen, I see you've opened my email a couple of times. Is there anything that is not clear about my message? I'd love to, kind of spend 5 minutes on the call with you. That is usually what gets you to that North Star, which is, out of the qualified meetings booked. But I think a lot of teams will get excited to say, oh my God, we just sent out a campaign and we have, a 60% open rate, which really doesn't mean too much.
Right.
And so that's usually, kind of where I try to shine a light for teams. And then of course, I think that the question you haven't asked me related to, those metrics is, how do you scale that? Right. Which is, there's a lot of diminishing returns when it comes to like, outbound. Adding 10 more SDRs or 10 more account executives that do self-prospecting doesn't necessarily translate to 10x, kind of meetings booked. So I think that, again, from a sales leadership perspective, there's something that, you need to sort of optimize for to understand, what the scalability of your existing process is.
Right. Makes sense. Thank you. Finally, thinking about your first sales role, what is one thing that you know now that you wish you knew at the time?
Ooh, it's a good question. I can take, I can go many, many different directions with this, Allison,
Whatever
but
you think is most impactful.
I'll tie it to outbound. One of my first outbound campaigns, I did it with the help of the CMO at the company. And I got a couple of responses, and I was frustrated. And he's like, Javi, why are you frustrated? No one's going to respond to you and tell you, hey, yes, I want to buy. And from an outbound standpoint, I think that a lot of people need to think about this, to say like, even if someone responds, no thanks, that's a response. That's an opportunity for you
Right.
to say like, hey, listen, we're, gathering feedback. We're new to the market. I'd really love to understand like what made you not want to take, kind of a meeting with me. And then you have to, kind of take that, proactive approach to sort of sell when there maybe is no need. And I say this because from an outbound standpoint, a lot of sales leaders, founders, even like SDRs will send an outbound, campaign and expect that somebody's going to respond and say like, yes, Allison, I need a new sales leader. Let me, kind of get on the call so you can tell me how you can make my team better. And
Yeah.
it's not like that. So obviously it's one of the things that I had a false expectation on. Coming from finance, perhaps that gave me, a different perspective because I had a big brand behind me. And when you go into startups that you don't have that brand behind you, then the challenge is a lot higher. So that's probably my 2 cents.
Yeah. And look how, where you are today. So clearly it persistence
Thank
pays
you.
off. So,
Thank you.
well, thank you so much for taking the time to join us. That's all the questions that we had today. So, I've really enjoyed this conversation. I look forward to further discussions in the future.
Awesome. Thank you, Allison. I hope everyone enjoys it.